Alrighty guys, it's your cousin Dustin. Here we go. It is June 26th, 2026. We're going to look at the markets. We're going to see what's going down. A lot of it's going down. So here we go. The Dow Jones is at 51,876.11. It is down 0.09% today. S&P 500 is at 7,354.02. It is down 0.05% today. The NASDAQ is at 25,297.62. It's down 0.24% today. The Qs are at 706.52, $706.52. They're down 1.38% today. Bitcoin is at $59,982.92. It's up 0.45% today. What else we got? Gold's at $4,103 even. It's up 1.37% today. Silver is at $59.60, up 1.37% today. Crude oil is at $70.24. It's down 2.34% today. The VIX is at 18.41. It is down 2.54% today. So this is a really interesting mix to me. You got gold and silver going up. Bitcoin is below $60,000. Crude oil going down and the VIX going down. Fascinating. Absolutely fascinating. All right. Let's go into the heat map. Here we go. So in the electronic technology sector of the S&P 500, we've got quite a bit of red. Red dead. My goodness. There's green in other areas though. Let's look at the green ones first. So let's look at the big green ones. We've got a big Eli Lilly up 7.13% to $1,206.76. Johnson & Johnson is also up at $254.26 to, it's up 3.99%. Microsoft is up 5.71%. Qualcomm is up 5.28%, and IBM is up 5.1%. AppLovin is up 6.99% to $477.08. CRM, Salesforce is up 5.45%, while the electronic technology sector and producer manufacturing sectors are both quite down. In the electronic technology sector, Apple is up 3.14%. Nvidia is down 1.64%. Broadcom is down 3.67%. Micron is down 6.69%. AMD down 2.06%. Marvell. I mean, they're all getting hit. What's this one? SanDisk down 10.46%. Texas Instruments down 8.46%. So, what's this one? ADI, Analog Devices, down. Alright, I'm thinking we go to the Russell. See what's happening here. My gosh. Electronic technology sector here. While there are some greens, we've got a lot of big downs. Look at this. Bloom Energy Corporation is down 18.49% today. My word. This one. TTM Technologies down 9.06%. Go over to Industrial Services. What's this? Credo Technology down 11.2%. I wonder what's got all these so down. We're probably going to try to find out. We're going to do our best here. You feel me? Whoa, what am I even doing? Russell 3000? Russell 3? Let's do it. Alright. Let's go back into producer manufacturing. A lot of these are down too. Applied Materials down 6.16%. Lam Research down 5.66%. Caterpillar down 5.63%. Alright. Let's, what's it, SanDisk? Let's look at SanDisk on Google Finance. I bet we can... Here's some prediction market consensuses. Tech layoffs up in April 2026, an 86% chance. Will any tech company announce one-time layoff greater than 40% of employees? 5%. Here we go, Yahoo Finance. The Motley Fool. This is Rich Smith at The Motley Fool, written at 10:18 a.m. today. The roller coaster ride that is investing in SanDisk stock took yet another turn on Friday as shares of the computer memory maker plunged 8% in the first 10 minutes of trading. You can blame OpenAI for that. Why not blame Micron? Sure, part of the reason SanDisk is selling off today relates to Micron's blockbuster Q3 earnings report, which also sent SanDisk stock flying 22% on Thursday. It makes sense that after a big move like that, there'd be some profit taking happening today. The bigger news today, though, concerns OpenAI. As the New York Times reports worries over the sudden downturn in the price of SpaceX, shares post IPO have OpenAI rethinking whether now's really the time for it to IPO. OpenAI's financial advisors are telling CEO Sam Altman he has to make a choice. IPO in 2027 and potentially secure a $1 trillion valuation for OpenAI, or IPO in 2026 and risk a lower valuation. Again, reportedly, Altman is intent on ringing the $1 trillion bell and now leans toward postponing the OpenAI IPO. What this means for SanDisk. So what does this have to do with SanDisk? OpenAI just completed a pre-IPO funding round that valued it at $852 billion and raised $122 billion in cash. OpenAI is expected to spend this money renting computing capacity from hyperscalers, who in turn will spend heavily on computer chips and memory to outfit gigantic data centers to run OpenAI's artificial intelligence programs. The same thing will happen when OpenAI raises perhaps even more cash at its IPO. But if OpenAI delays its IPO to 2027, it might have to delay spending all that money. This postpones the windfall for hyperscalers, for chip makers, and for SanDisk too. That's why SanDisk stock is down today. Should you buy SanDisk stock? Should you buy stock in SanDisk right now? This is according to these guys, not me. Before you buy stock in SanDisk, consider this. The Motley Fool Stock Advisor analyst team just identified what they believe are the 10 best stocks for investors to buy now, and SanDisk was not one of them. And this is what they always say at the end of the Motley Fool thing. I'm not reading that. Let's go. So that's pretty cool. OpenAI thinking about postponing. I got one. Let's do this. What do you guys like better, Polymarket or Kalshi? I reckon I use Polymarket more. Let's just see. Just for fun. Alright, here we go. When will OpenAI IPO by? June 30th, 2026? Absolutely not. July 31st? No chance. August? No. September? No. December? These are all within this year. I don't know. I just don't know, guys. What do we think? Y'all think SpaceX is more of a viable company than OpenAI? I wonder. I would like to know. I really have no freaking clue. Somebody tell me. But let's look at some other stocks. Let's say Rocket Lab. Why not? So Rocket Lab's at $84.54. $84.85 in the after hours. My bad. Up 0.36% in the after hours. Up 4.77% over the course of the day. Last 5 days, it's down 21.14%. Last month, it's down 40.96%. In the last 6 months, it's up 19.66%. So, hey, tell you what. Year to date, it is up 21.19%. In the last year, it's up 133.92%. The last 5 years, it's up 704.38%. And on a maximum chart, this goes back to November 27th, 2020. It's up 760.9%. They're a little unprofitable. They are negative EPS of negative 33 cents. Got a 52-week high of $151 and a 52-week low of $33.73. So they're kind of in the middle range. Alright. Perspectives from across the web. Rocket Lab declined over the past month as investors rotated capital following the SpaceX IPO. Despite recent technical volatility, record Q1 revenue and significant NASA contract wins sustain a positive narrative. Analysts project continued growth, though consensus suggests the next quarter depends heavily on meeting Neutron development milestones and sustained launch cadences. I just did a video on SpaceX the other day. I don't want to do it all right now. I'll say this. I like where they're positioned at right now. To me, this seems like a pretty good spot. Especially if they're talking about trying to become more and more profitable as they go. You never know. But you never know. This is not financial advice. You always got to think twice. Let's look at cryptos. Alright, we're here on CoinMarketCap. We're going to look at the top 5 cryptos on CoinMarketCap today. We got number 1 is Solana. Trending number 1 here. We got Solana. It's at $72.27. In the last hour, it's up 0.73%. In the last 24 hours, it is up 6.92%. Bitcoin is at $60,000. No, $60,097.27. So just while we've been watching, it's surpassed that $60 point. That's very interesting. In the last hour, it is up 0.2%. In the last 24 hours, it's up 0.52%. Claude. Claude is much less than a cent. 0.00001 cent. In the last hour, it's up 0.03%. In the last 24 hours, it's up over 100%, I guess. XRP is number 4. It's at $1.04. It's up 0.27% in the last hour, and in the last 24 hours, it's up 0.666%. Number 5 is AAVE. AAVE. It's at $95.59. In the last hour, it's down 0.57%. In the last 24 hours, it's up 17.24%. Fascinating stuff. Cool stuff, neat stuff. So there's nothing really catching my eye here on cryptos besides Bitcoin. I find Bitcoin to be interesting right now because it's hanging around that $60,000 mark. Has it turned around, guys? Oh lordy, it's storming outside and my dog's scared. We're gonna look at it on TradeView here. Chill out, Bubba. It's alright. Now look at that. So, what is the 6-year cycle for Bitcoin? Is what they say? I think we're hitting the end, maybe. Look at this. I'm not a Bitcoin expert by any means. I'm not an expert in any of this shit, if I'm being honest. But I do enjoy it. I have a lot of fun with it. I watch a lot of other people's stuff and try to learn as I go. Hopefully someday I'll know a lot more about it. So let's continue. Look at this. This is so we want since 2020. There we go. So here's more of the pattern right there. And that's since what? 2025. That's like a year, I guess. Full disclosure, I do not have any Bitcoin, but I think it's fun to look at, and I might buy some. You never know. You never know. Sorry, guys. I feel like my voice is kind of quiet today. I'm like, my throat hurts a little bit. And that's not my throat hurts. I'm just like hoarse. Okay. Here we go. CFTC approved Bitcoin perpetual futures for Kalshi and cleared Coinbase Financial Markets to offer institutional clients access to Deribit listed crypto options and BTC perpetual futures. Strategy holds 847,363 Bitcoins. That's less than 4% of the supply at average cost of $75,500. Position funded by preferred shares, which face pressures as Bitcoin prices fall and dividend-funded model weakens. Bitcoin net demand hit below 273,000 Bitcoin for the 208th straight day, showing older coins are re-entering circulation faster than accumulation. This extended negative streak set a series low. Think it's over for Bitcoin now that all the SpaceX and OpenAI and all that other stuff's coming out. Contrarian view is honestly a lot of times very interesting, very fascinating stuff. That's enough of that. So we go back to the heat map a little bit though. Good grief, all these ads. Get out of here. Meta up 1.36% today. The producer manufacturing sector is down. Most of them are down. Let's take a little look at Meta. Meta's at $551.09. Over the course of the day, it's up 1.36%. In the after hours, it's up 0.15%. I really just want to read an article about them. Zuckerberg asks Meta to explore working with Polymarket and Kalshi. Meta stock price prediction, the case for nearly 50% upside. Meta's flurry of AI initiatives this month hasn't helped lift the stock. What will? Careless People author an explosive new lawsuit accuses Meta of trying to silence her. Meta, an inconvenient truth the market hasn't priced in before Q2. Seeking Alpha. Let's see if we can read this one. Alright, this is by Rick Orford. One thing I find perplexing about earnings seasons is that sometimes the loudest quarters are the ones that get punished the hardest. Take, for example, Meta. They reported their fastest revenue growth since 2021 and the stock dropped on the news anyway. Why it happened is covered in the sections below, but the point is that the gap between a good quarter and a sell-off is usually where the money's been hiding, and the calendar is giving investors a favor. Meta will report its second quarter 2026 earnings on July 29th, 2026, so we've got a little window to size things up before making a move. In this article, I'll walk you through the good, the bad, and the spoiler alert. And spoiler alert, my strong buy rating for Meta remains in place, as does my position in the stock. I'm not like I say, I'm not an expert. I'm not ever giving advice. But for me personally, when it comes to Meta, if it's around 20 on the PE ratio, I'm looking and I'm liking. And I'll try to buy as much as I can. Meta's fastest revenue growth since 2021. And if it's below that, I'll buy as much as I can. You know what I mean? That's pretty much my little, whatever you call it, my little gauge. It gets there sometimes, you know what I mean? It goes up and down and all around. Back to the article. Meta's fastest revenue growth since 2021 came with a catch. Before we get into the forward-looking angles, it helps to know where the company currently stands. No. Starting with the top, Meta's revenue for the first quarter rose 33% year over year to $56.31 billion. Operating income climbed 33% to $22.87 billion, and net income surged 61% to $26.77. Over the same stretch, or 10.44 per share, GAAP, which looks quite spectacular, but it's also a bit of a wrinkle on its own. Meta's reported earnings for the quarter were inflated by an $8.03 billion income tax benefit tied to the U.S. Corporate Alternative Minimum Tax Transitional Relief. Strip that out, and Meta's diluted EPS would have been $7.31. This is the number I'm focusing on. In terms of segmental performance, Meta's advertising revenue increased 33% to $55.02 billion, while the family of apps revenue jumped 73.5% year over year to $885 million. Rather good, wouldn't you think? Maybe, but it's the internals that I care about the most. Looking at it, ad impressions rose 19%, while average price per ad rose 12% year over year. That overall mix is by far the healthiest growth for Meta, because when volume and price climb together, it means the company is selling more inventory and getting paid more per unit at the same time, which is also a signature of demand outrunning supply. The point is, plenty of ad businesses can buy volume by sacrificing the price, but only very few can grow in tandem at this scale. CapEx raised to as much as $145 billion, and the market didn't like it. Further ahead, Meta guided second quarter 2026 revenue to a range of between $58 and $61 billion, which would imply about 25% year over year. At the midpoint, full year expenses are expected to come in between $162 and $169 billion, and management reiterated fiscal year 26 operating income should exceed the 2025 level of about $83.3 billion. The problem is with the CapEx line. It's one of the areas where the discomfort lives. Meta's full year spending guidance was raised to between $125 and $145 billion from a prior range of $115 billion to $135 billion as a result of higher component pricing, which is in fact one of the driving factors behind the stock sell-off, despite Meta's stellar quarterlies. Well, I understand why someone might sell the news. Raising capital spending on component costs rather than reporting a new wave of demand is an inconvenient truth that the skeptics will seize on, and fairly so, as it compresses near-term cash flow without an obvious revenue offset in that same sentence. However, I'd push back on the assumption that spending is value destructive, as it's fairly lazy. Meta has earned a longer leash than most tech names, especially given that the last 3 years of its infrastructure investment have actually shown up directly in the Advantage Plus conversion gains, which are now driving the advertising business. CEO Mark Zuckerberg also framed the last quarter around product instead of numbers. He pointed straight to the Muse family of AI models, and the first one of the gate is Muse Spark, calling it the company's biggest win of the year so far. I'll circle back to why that is in the next section. Personally, I think Muse Spark is one of the nails where everything else in the bull case hangs on. What I'd keep my eye on in the next quarter is the margins. With all the spending already on the table, the bar management set for itself is almost too easy to achieve because operating income just needs to clear 2025's $83.28 billion level. What concerns me right now is whether Meta keeps generating record profits while the money still flies out the door. So far, I don't see any reason why it won't continue to happen. The proof will show up in the margin line. Specifically, operating margin was 41% in Q1, flat versus a year ago. Even with the spending wave already in full swing, if Meta can keep its margin parked near 41% while revenue climbs in the mid-20s or higher, profit will compound through the spending cycle. It is storming. My goodness. $30 billion in hidden revenue no one's talking about. So far, Meta's monetization layer is scaling. The stock, however, hasn't been running in the same direction. At the top of that funnel is Muse Spark, shopping mode. Why? To review Meta's potential undervaluation, we have to start with the run rates management disclosed. Since those are grounded figures, ARR in Meta's valuation optimization suite now sits above $20 billion, more than double. Jesus Christ. The same period last year. At the same time, the partnership's ad revenue run rate also doubled to $10 billion over the same stretch. And surprise, surprise, those two lines never really made the news. Yet they described $30 billion of annualized revenue growth at triple-digit rates in a business the market still values mostly on its legacy feed. Yo, it's storming so crazy here. That's why I'm having trouble, guys. Sorry. Jesus. To me, that's the type of compounding effect that keeps me invested, and it's also the part of the model that got little to no investor attention. Add to that the fact that Meta's business AI now handles more than 10 million conversations each week, which is up from 1 million at the start of the year. So that's a 10x growth rate in just a year. Management was candid that these business AIs are currently free for most, though they also noted they expect to pursue a long-term monetization model with it. And business AIs today are currently free for most businesses on our messaging apps. But as we make more progress, we expect that we will also work towards establishing a longer-term monetization model, and will also consider other services that we can offer to businesses in the future. But we don't have anything more to share today. That was according to Meta. Meta themselves, I guess. I'm assuming. Any surface growing 10x with zero attached is pure optionality, and I see the market not looking at it, at least not today. But when a discount is eventually attached to this 10x growth, I'm all but sure the stock will re-rate. As for Muse Spark, this feature allows a user to utilize AI to search Facebook Marketplace listings alongside options from across the internet, which can be refined by price or style, and browse a brand's products in a grid. Why does it matter? To me, the strategic point is to retain the user's intent. I mean, every product search that used to leak out to a company like Alphabet or Amazon now has a path to resolve within Meta's own apps. That specific search intent is what Advantage Plus is tuned to convert, considering Meta's user base. That's a structurally smarter design than chasing commerce with a standalone storefront because it monetizes the behavior users are already showing. On a side note, independent forecasts project Meta to surpass Alphabet as the largest digital advertising platform in 2026, with net ad revenue near $243 billion compared with roughly $240 billion. For Alphabet, if this materializes, it would be the first time Alphabet would not hold the top spot in the history of digital advertising. What's important is that Meta is gaining market share, as evidenced by its growth rate running roughly double Alphabet's, with Muse Spark shopping mode intended to widen that exact gap. Muse Spark. Keep it in your little noggin. A $12 billion fine is on the table, and it may not be the last. Jeez Louise. Now, it would be dangerous to leave the other side of the coin unseen because management isn't flagged in its own writing, and one of which is the looming regulatory risk around Meta. The management's exact words were, "Finally, we continue to monitor active legal and regulatory matters, including headwinds in the EU and the US, that could significantly impact our business and financial results. For example, we continue to see scrutiny on youth-related issues and have additional trials scheduled for this year in the US, which may ultimately result in a material loss." Jeez. It's no fun. When a line like this appears in management's own prepared remarks, I read it as a deliberate flare. The term material loss in this case potentially refers to a fine significant enough to affect the financials, not a rounding error. Moreover, back in late April 2026, the European Commission issued a preliminary finding that Instagram and Facebook breached the Digital Services Act by failing to keep children under 13 off the platforms, and a confirmed finding allows a fine of up to 6% of Meta's total worldwide annual turnover. If we measure that against the $201 billion in annual revenue it generated in fiscal year 25, the penalty would be north of $12 billion. What's more is that the Commission can also impose periodic penalties to compel compliance, meaning the cost doesn't necessarily end with a single charge. A one-time fine is bearable for a company generating this amount of cash, but a recurring penalty would be far more concerning. That said, none of it is really fatal to the business, and Meta certainly has the resources and the legal network to work it through. But it does confirm that the legal risk has more than one moving part right now. What I'd watch in the next quarter is timing. Oopsie. There we go. Specifically, any new ruling or trial date could fall within the same windows as Meta bolsters its growth, and for a day or two, headlines about these risks might do the talking instead of the actual numbers. The risks are real, but so is the opportunity. Meta's spending and legal issues explain the stock, but it's also handed patient investors a monetization infection of sorts, discounting the stock. Sure, the risks aren't something to be ignored, but I'm also watching it closely. But to me, they are manageable. Rather, I'm reminded that even good news can get drowned out by the bad, which gives long-term holders like me an opening to build up on a position. With that, and everything else outlined above, my strong buy rating for Meta remains in place. That was Rick Oxford. Rick is a Wall Street Journal best-selling author and financial writer specializing in stocks and options trading. He's recognized as a top 1% financial expert and blogger. Look at that. Rick Oxford. Okay. Will Meta Platforms report above 74,500 head count in Q2 2026? Will Meta Platforms report above 74,000 head count in 2026? Will the S&P 500 be above 7,354.02 on June 2nd or June 29th, 2026? Oh, that's an interesting one. All right. I'll just click on crude oil here and take a look at this for a second. Last 5 days, it is down 7.14%. Very nice. We'll just ask an old AI question here. Why did crude oil prices drop below $70 on June 26th? That's today. Crude oil prices dropped below $70 a barrel on June 26, 2026, primarily due to the rapid unwinding of the war premium as tensions between the United States and Iran eased. I don't know about that. That seems dumb. The decline was driven by several key factors: recovery of shipping traffic, concerns over global supply disruptions diminished as traffic through the Strait of Hormuz accelerated. Daily crossings reached their highest levels since the conflict began in late February, with roughly 75% of pre-war export levels restored. Sanctions relief. The U.S. Treasury issued an unprecedented 60-day waiver, temporarily lifting major sanctions to allow the sale of global transport of Iranian crude oil through August 21st, 2026. Regional supply ramps. Major Middle Eastern producers, including Saudi Arabia, resumed significant operations. Saudi Aramco restarted oil loading at its Ras Tanura terminal after a nearly 4-month halt, signaling a substantial increase in regional output. Diplomatic progress. A ceasefire agreement and ongoing peace negotiations between Washington and Tehran led commercial traders to offload risk premiums that had previously inflated prices to as high as $118 earlier in the year. Despite a late week dip to a low of $68.56, prices regained some ground to settle at $70.24 by the market close on Friday. All right. Very interesting stuff, and we'll end by looking at Bitcoin, which is back down below 60,000 to $59,831.45. There we have it. So, it's your cousin Dustin, guys. It is June 6th, 2026. It's June 26th, 2026. June 26th, 2026. Like and subscribe. Thanks a lot. All right.